Hello, everyone, and welcome to New Year, New Legal Entity. This webcast is brought to you by CPA Practice Advisor Magazine and CorpNet. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I'll be your moderator today. Before we get started, I'd like to explain how CPE for this webcast works. The webcast qualifies for 1 credit of continuing professional education. If you plan to earn credit for attending this session, you must stay with us for at least 50 minutes. In addition, we will display 4 polling questions during the webcast. You need to record an answer for at least 3 of the questions, as this is our verification that you are still watching the event. Later today, you'll receive an email from CPA Practice Advisor that contains a link to your CPE certificate, assuming you met the requirements for CPE. Please note that we can give continuing education credit for multiple people watching on the same computer. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. And at the end of the event, we'll provide an opportunity for you to send us their email addresses so that they too can receive credit. At any time, you can enter any questions you might have in the Ask a Question box provided on your screen, and our speaker will try to get to as many questions as possible during the presentation. Questions not answered during this live webinar will be addressed by the speaker afterwards via email. Slides and resources are available for download. If you click the Event Resources button on the bottom of your screen, you'll see a link to the slides for this presentation, as well as a link to 2 other resources provided by our sponsor. Today, we are joined by Nellie Akelp, founder and CEO of CorpNet. And now we're ready to begin.
Thank you so much, Gail. Hi, everyone. Happy New Year to everyone. My name is Nellie Akelp, founder and CEO of CorpNet. It is an absolute honor and pleasure to be here. And today's webinar, we're going to be talking about New Year and a new legal entity. One of my favorite subjects, by the way, because when it's the new year, it's like we're all scrambling around to make sure that we have that right entity for our business. So I'm really happy that I get to present this content to you. A little bit about myself. I'm the founder and CEO of CorpNet. Our company CorpNet is an online legal document filing service, and our mission here is to educate and assist entrepreneurs and business professionals like yourself, CPAs, accountants, tax professionals, when it comes to any aspect of the business filings and compliance process. Here at CorpNet, we offer the most comprehensive, cost-effective services when it comes to helping your clients or helping yourself as a business owner when it comes to starting a business, whether it's incorporating, setting up an LLC, growing that corporation or LLC, or keeping it in compliance, whether it's setting up for payroll taxes, expanding that business, or simply keeping it in compliance with all of the state filings that are required to keep that corporation or LLC in compliance with its state and annual filings. We offer our services in all 50 states. If you'd like to follow the website while I'm presenting, you can follow us at www.corpnet.com. And for those of you that are interested in offering our services, we got a great surprise for you at the end of this webinar. A little bit about myself personally. I've been in the space since 1997. I'm a lawyer. I don't practice law. I'm not licensed, but I do have my JD degree, and I've been in the online legal document filing space since 1997. As a result, I've become a huge influential expert when it comes to any aspect of the business filings and compliance process. And again, you can closely follow all of my content on the web in a variety of different publications, including Forbes, Entrepreneur Inc., CPA Practice Advisor, Accounting Today, and many other business publications. So with that said, now that we're kind of done with the housekeeping, let's get into our webinar. So today's agenda and goals. As we all know, as a company evolves, the business structure that we once selected for that business may not be as advantageous as it once was. So business owners and your clients, okay, will be depending on you as their professional to keep them up to date on the most optimal entity choice for their venture. In this session, we're going to discover all of the advice that you need to learn to best advise your clients. So we're going to have details for you when it comes to summarizing entity options along with their advantages, disadvantages, and also tax implications. We're going to also determine situations when, for example, an entity conversion may be necessary. So for those of you wondering what an entity conversion is, we're going to define that for you. An entity conversion is if you're, for example, a corporation, and now you may realize that maybe you or your client need to convert out of that corporation into an LLC. So we'll be discussing all of those and the steps required. We're also going to define the steps for converting from one business entity into another, or discuss how there are situations where you may have to, maybe convert from a C Corp to an S Corp, and how a conversion may not be necessary, and it's only a matter of a tax election filing. And then we're going to review necessary compliance items to make sure you keep your entities in good standing, and also make sure you have the best tips at your fingertips to advise all of your clients. So with that said, let's briefly do a quick review of the importance of business incorporation. So for those of you who know what a corporation is, it's a legal entity that stands on its own. And when a business owner wants to separate itself from the business, oftentimes what they'll do is they'll put that business entity into a legal entity separate and apart from themselves as the business owner. So many of your sole proprietor and general partnership clients may be wondering if it's time to create a formal business structure and basically close that proprietorship or general partnership and start operating their business as a corporation or an LLC. So if your client is still on the fence, here's some major reasons a small business owner would choose to incorporate or form an LLC. First and foremost, liability protection of personal assets. One of the main benefits of incorporating or setting up an LLC is that we want asset protection, and we want to shield ourselves from being personally liable for any acts that the business may conduct and potentially end up on the wrong end of a legal battle. So the main benefit of incorporating or setting up an LLC is basically simply boils down to liability protection and also asset protection. Second benefit is there is a separation of a legal entity. So there's a separation of you as the business owner who's the owner of that business from that legal entity. So one of the main benefits is that you're separating yourself as the business owner, because as a corporation or an LLC, that's a natural separate legal entity, standing on its own. Another benefit is added credibility. A lot of times by adding that INC or LLC to the end of that business name is going to look in the eyes of those clients dealing with you that you're more of an established entity. And why? It's because they're going to look at you as someone who's taken the necessary steps to legalize your business. So they're likely wanting to do more business with you. So there's that added credibility. There's also perpetual existence with a corporation or an LLC. Why? Is because it's a separate legal entity on its own. So God forbid, if one of the business owners passes on, the entity will continue to exist unless it is formally dissolved. There's also tax flexibility when it comes to a corporation or an LLC that we're going to cover later within this webinar. And as a corporation or an LLC, one of the main benefits is that you're more likely to be able to deduct additional expenses because, again, as a separate legal entity, you're able to divide those expenses that are associated with that corporation or LLC. So more likely it's more clear as to what can be deducted. So these are the benefits in a nutshell. Now, when we get to it, you want to ask yourself, well, how do we review entity options? Okay. And there are tons of different entity options that are available to you at your fingertips where you can review with your clients. Now, the questions that you want to consider asking your clients when they come into your door when reviewing entity options is the following. So first and foremost, you want to definitely ask during your discovery process as to who qualifies to own the company, what must be done to transfer ownership of the company, whether they are, worried about taxes the company is subject to, if they're interested in the ability to obtain credit and funding, and then how, worried and concerned are they about being personally liable and how many assets they have. If they are considering becoming a corporation or an LLC, what does their temperature look like and tolerance when it comes to ongoing compliance requirements and formalities? And then last but not least, where the business will be conducted. In addition to that, as we've already discussed, one of the main reasons why people want to incorporate or form an LLC is because they want to limit their personal liability for business activities. So that's definitely on the top of your discovery list when you're talking to clients in discovering and reviewing entity options with them. You also want to, make sure whether that client is going to have a business partner or an investor, what their company's expected earnings and deductions will be, if they're interested and have a desire to minimize self-employment tax obligations, their business goals, and registration and administrative costs to set up and maintain that business structure. So with that said, the popular entity choices are the sole proprietorship, the general partnership, C corporation, S corporation, the LLC, which also stands as the limited liability company, and the professional corporation. Now, keep in mind, for purposes of this particular webinar, there are other entities that also exist, such as the professional version of the LLC, which is called the PLLC. And then there's also LLPs, there's the nonprofit, but we're very, very limited in time here. So we wanted to just bring you what the most common entity choices are as it relates to this webinar. So with that said, let's talk about the sole proprietorship and partnership. Very simple to form and maintain. What is a sole proprietorship? Sole means one person. It's basically one person starting a business to make profits. Similarly, a partnership is two or more people forming a business to make a profit. Again, it's very simple to form and maintain. There's no financial statements or lengthy paperwork to stay compliant. It's very simple to tax, as income earned by the business is considered income earned by the owner. There is absolutely no separation of personal and business assets. So you are the business, whether it's you as a sole proprietor or you and a partner as a partnership. There are no separation of personal and business assets. and you are liable for any act that you yourself commit or your partner commits, and they can come after you personally in a sole proprietorship. And worst case scenario is that if you're in a partnership with someone else, guess what? You are going to be liable for not only their acts, but your own acts. And guess what? They can go after whoever has the deeper pocket. So again, very simple to form and maintain. Basically, you are the business. Sometimes if an owner doesn't want to conduct business under their own name, they will conduct it under what is called a fictitious business name, which is basically, for example, Nellie ACALP doing business as ABC company, ABC company, or Nellie ACALP. Let's say I have a bakery store, Nellie ACALP doing business as Nellie's Cupcakes. So again, it's, if that proprietor or partnership wants to do business under a fictitious business name, the way to do that is by filing what is called a doing business as filing, typically filed at the county level, where in the county where the business is located, and then the sole proprietorship or the partnership can do business under a fictitious business name, which is again completed via a DBA filing, also referred to as doing business as filing. But with this type of entity, owners generally must sign contracts and paperwork in their own name, because again, the business does not have a separate identity under the law. And with a sole proprietorship and partnership, typically you will have to act as a personal guarantor. You cannot gain business credit, take out business loans, or raise capital in any other way. Now that we're done with the sole prop or the partnership, we're going to go into a separate legal entity land. And these are all the different types of corporations: the C Corp, the S Corp, which is really an C corporation with a tax classification and election. We're going to talk about the LLC and the professional corporation. So let's start with the C corporation. A C corporation is a separate legal entity on its own. It's also referred to as a general for-profit corporation. It's a separate legal taxable entity separate from its owners. Generally speaking, the owners of a C corporation are referred to as shareholders. So a C corporation's shareholders' personal liability is limited to the amount they have individually invested within that corporation. In contrast, however, owners of a sole proprietorship that we just talked about or a partnership are personally liable for business debts and legal issues. So one of the things you'll often hear is a C corporation's income tax treatment, referred to as double taxation. First, what we're talking about here when we're talking about double taxation is that with a C corporation, the corporation pays taxes on its profits at the corporate level. Then the individual shareholders pay taxes on the dividend income they receive from the business as a distribution at the shareholder level. That's why with C corporations, there is this double taxation concept. So even though forming a C corporation involves more legalities and formalities, the costs are reasonable compared to other business structures that do not offer the same level of liability protection, growth potential, and tax flexibility. So if you or your clients are looking for the type of entity that's going to give you the most type of liability asset protection, a C corporation is one to consider. Now, moving on to the S corporation. The S corporation basically is not an entity, and this is the confusion that a lot make. An S corporation is a tax election that's given to a C corporation or an LLC. Okay, it's a filing that you have to request by filing form IRS form 2553, which is the S corporation election form, and you submit that to the IRS, where you're requesting a C corp or an a C Corp or an LLC to basically have an election where they're now looked upon as a pass-through entity by the IRS. So keep in mind, an S corporation, as it relates to a C Corp, it's really a C Corp that's elected S corporation status, or an LLC that has S Corp tax treatment. It's an LLC that has elected S corporation pass-through treatment. So again, an S corporation is not an entity on its own. It's really an LLC or a C corporation that has elected pass-through tax treatment with the IRS. A company must meet strict requirements with the IRS to qualify for S corporation status, must be owned by shareholders and run by board of directors. You cannot have more than 100 shareholders. The shareholders have to be U.S. citizen or resident aliens of the U.S., and there can only be one class of stock as it relates to a C corporation. And again, you unlike an LLC, not just anyone can qualify for an S corporation status. Also, with an S corporation, if it's a C Corp electing S Corp, again, you have to hold annual shareholders meetings and directors meetings, document key shareholder decisions, and file separate corporate income tax returns. And again, this is a tax designation that's granted by the IRS that lets corporations, when it comes to their tax treatment, to be looked upon as a pass-through tax entity. So what happens when we're talking about a C corporation, you're avoiding that double tax hit. So what's happening is that instead of the corporation reporting and getting taxed when it reports profits at the corporate tax level, it only gets taxed once because the corporation's profits and losses pass through, and it's basically passed through and only reported at the shareholder level, thereby avoiding double taxation. Now, again, a lot of you may have a lot of questions with the S corporations, especially because that S corporation election deadline is coming around. And this year it's going to be March 17th because the 15th falls on a weekend. But for those of you wondering what that S Corp election deadline is referring to, that deadline of March 17th relates to existing corporations and LLCs who do not have an S corporation election yet and want to have their corporation or LLC treated as an S Corp in the eyes of the IRS. So for existing corporations and LLCs that don't have the S Corp tax designation, but want to elect pass-through taxation for the 2025 tax year, they can submit the IRS Form 2553 on or before March 17th, 2025 of this year. And if they qualify, then in the eyes of the IRS, that C Corp or LLC will be taxed as an S Corp. Again, if you have any questions, post your questions within the comment box and we'll be getting back to you. Let's move on to the LLC. So the LLC stands for a limited liability company. Again, this is one of my favorite types of entity structures, and I refer to this entity as you get to have your cake and eat it too. Why? So next to operating a business as a sole proprietor or partnership, an LLC is the least complex and costly form of business to start and maintain from a state compliance perspective. Why? It's because it's basically taking and mixing all of the aspects of a proprietorship or partnership with elements of a corporation, and really the single piece of document that controls the LLC is called the LLC operating agreement. So really, really, really simply stated, it's basically a hybrid of a proprietorship partnership, taking elements of a corporation without all of the legal formalities and paperwork that are typically associated with a corporation. So you get the best of both worlds of having all of the asset liability protection, added credibility, flexible taxation, everything that you get as far as the benefits of forming a corporation or an LLC without all of the heavy paperwork and compliance formalities. Now, because an LLC is considered a separate legal entity from its members, its financial and legal responsibilities are also its own. Because remember, LLCs and corporations are considered separate legal entities. However, it's considered a disregarded entity for tax purposes. What do we mean by this? What we mean by this is that for tax purposes, business income and losses are passed through to its members' tax returns and are subject to members' individual tax rates. So with an LLC, for example, if it's a single member LLC, and if that single member LLC has not elected for that LLC to be taxed as an S Corp or a C Corp, by default, that single member LLC will be taxed as a sole proprietorship. Similarly, if that LLC has multiple members, and if it has not elected to be taxed as an S Corp or a C Corp, by default, that LLC will be taxed as a partnership, which means all of the income and losses are passed through to its members as tax returns and are subject to the members' individual tax rate. The other thing that we want to make sure we take away about LLCs is that members of an LLC cannot be employees of an LLC. As such, they cannot take a paycheck from that LLC. The only way they can take money out of that LLC is in the form of a draw. And for that reason, if you take a draw out of the LLC as a member of that LLC, you're going to be subject to paying higher self-employment taxes. Now, a lot of my clients ask, so Nelly, how do we get around this? Well, the way to get around this is for that LLC to be taxed as either an S Corp or a C Corp. Now, with the S Corp, there's qualifications that are required to be met. So if that LLC wants to have its members take a paycheck out of that LLC, they need to have that LLC qualify as either an S Corp or a C Corp. Once that qualification is met, depending on whether they meet the S Corporation requirements, and if not, then they can elect C Corporation status for that LLC. After they have met those requirements, then the members of that LLC can register for payroll state accounts and then take a paycheck out of that LLC. But by default, members of an LLC cannot be employees of an LLC, and they cannot take a paycheck and thereby have to pay higher self-employment taxes. Now, keep in mind, there are multiple types of LLC options available, which we can just have a 1 hour webinar on just LLCs. But generally speaking, by default, when you register an LLC with the Secretary of State's office, it's basically by default a member managed LLC. However, there are other types depending on how you want to manage that LLC. You can have member managed LLCs and manager managed LLCs. And again, if you have more questions on that, we'll be more than happy to assist you. Let's move on to the professional corporation. One thing before we move on is, again, LLCs are generally for any business owner that wants that separate legal entity, but without all the compliance formalities. Now, if the business owners of the LLC are going to be some sort of a professional that are going to require a license from the state board, then If that state allows it, they can also, there is something called a professional LLC. So same thing as an LLC, but for a professional such as a doctor, lawyer, accountant, who doesn't want to set up a professional corporation, but they want to opt for the LLC because of less formalities. Now, moving on to the professional corporation, again, very similar to a C corporation, but it's a C corporation for professionals, hence called a PC or professional corporation. Again, individuals who provide a professional service can benefit from forming a professional corporation. It's typically for a professional service provider, such as doctors, attorneys, accountants, and it shields them from liability for the operations of the business. However, in most cases, the individual who provided the service may not be shielded by the professional corporation. So it's tricky, okay? Generally speaking, in a professional corporation, all of the shareholders need to hold that specific license, which has to go with what the professional corporation is set up to do, such as, let's say it's a doctor providing medical services. If that professional corporation is going to be set up with multiple doctors, then all of the doctors need to carry that same license for providing medical services. Now, the tax advantages for a professional corporation are the same as the advantages afforded to a C Corp or an S Corporation. And keep in mind, a professional corporation can elect S Corporation status where its members qualify and meet the S Corporation requirements as designated by the IRS. I've gone ahead and did a summary for you in this slide as to, it's basically a review of all the different entity types, the formation filings that are required, and then, which ones have limited personal liability, transferability of interest, duration, pass-through taxation, ability to raise capital, and then if there's a limitation on the number of owners. Again, these slides will be available to you after this webinar, so I urge you to download them. But as you can see, for example, if we pick the C Corp and we go down this down the tab of C Corporation, as you can see, there's state filings required. There is liability protection, there is asset protection, there is transferability of interest, there is no limit on the duration. And if, for example, that C Corporation is just going to be a C Corp, there is no pass-through taxation. However, if you look to the left on the C Corporation tab, if that C Corp elects S Corporation, they can have pass-through taxation. There is an ability to raise capital, and again, limitation, there's no limit on the number of owners as a C Corp, but you can only have up to 100 shareholders as an S Corporation. When it comes to the compliance requirements for each of these entities, as you see on this slide, there are some initial filing requirements that are required when it comes to corporations and LLCs, whereas with sole props and general partnerships, there's really minimal compliance requirements required, actually none, if any. Some of you may be wondering, what is a registered agent? As you can see, any type of LLC, C Corp, or S Corp is going to require you to designate a registered agent for service of process. A lot of you may be wondering, what is that? It's basically a person over the age of majority that is going to be acting as the agent of service on behalf of that corporation or LLC. When you set up a corporation or LLC, each corporation or LLC is required to name that agent and provide a physical address for that agent in the state that they're planning on forming that corporation or LLC. That registered agent, again, has to be a person over the age of majority. It can also be a lawyer or your accountant or a commercial registered agent, such as someone like CorpNet, who can act on behalf of that corporation in all 50 states. But again, there are no private mailboxes, no PO boxes allowed. It has to be a physical address with a person that's designated as that agent for service of process, available during normal business hours, Monday through Fridays, to be available to accept service of process on behalf of that corporation or LLC. With that said, we are in time for our first polling question. Gail, back to you.
All right, this is our first polling question for this webinar. Which entity has a duration that ends with the owner withdraws, when the owner withdraws or dies? The options are, and that isn't the question that's on the screen. Oh, wait, here it is.
Oh,
yeah,
I apologize.
Okay, here it is. All right, sorry. So I'll read it again. Which entity has a duration that ends when the owner withdraws or dies? And the answer options are LLC, general partnership, sole proprietorship, or C corporation. So as a reminder, this is our first of 4 polling questions. You'll need to answer 3 in order to qualify for CPE credit. If you have any problem answering the questions on your screen, you can type your answer in the Ask a Question box at the bottom of your screen. All right. And then once you submit your answer, you can click the little blue X if it appears. It looks like it doesn't, to make that go away if the question is still on your screen. Okay, I think we're ready to continue.
Thank you, Gail. And I just want to confirm, do I have all the way up to the hour for this webinar, or did you want me to leave some time for a Q&A here?
I think you can go all the way to the top of the hour if you need to.
Wonderful. Thank you so much for that clarification.
Sure.
Okay, so now that we have really covered basically, all of the different types of the entity options available, why one would consider really, converting from one type of entity to another. In this case, if they're, for example, a sole proprietor or partnership, the questions again to ask your clients when they're coming in is really, does your client have any type of personal assets? Are your clients concerned about personal liability? Does your client need to live off of the business profits each year? And whether your client wants to keep paperwork and administration and administrative costs as simple as possible. Do they have a tolerance for corporate formalities and paperwork, or do they want to limit their corporate formality responsibilities? And then whether your client wants to keep the business forever. Also, for those of you that may be following us on the website, again, if you are, it's www.corpnet.com. We have an amazing tool that you can actually have on your screen before your client walks into the office. It's our business structure wizard tool. Again, we'll go ahead and post this in the chat for you. It's an absolute free tool that you can basically have on your computer before your client walks in. And it's a wizard. It's been created by attorneys and accountants, and it takes you and your clients through a series of questions that are typically associated with their business, which a lot of the questions are the questions right here on the screen. And then at the end of that wizard, it recommends the best recommended entity that your clients should consider forming based on the answers that they have given to that wizard. So for those of you interested in checking out our wizard, again, we're going to go ahead and post it in the chat for you. And if you don't have a chance to look in the chat box, you can go to www.corpnet.com and look and search for CorpNet's Business Structure Wizard tool. Now, what are the steps to get started? So you're ready, you want to set up that corporation or LLC for your client. Well, most new corporations have to pass through the following steps. First and foremost, checking to make sure that name is available for use as a corporation or LLC within the state that they're trying to form that corporation. Then, you should have had your entity type chosen by now. Make sure if it's a corporation or LLC, make sure you designate a registered agent within the state with a physical address in the state that you're forming that corporation or LLC. Then you take all that information and you have to basically file and submit the article of incorporation paperwork to the state. The articles of incorporation are the document that you file with the state that you're planning on bringing that corporation into life. Once those articles are submitted, and after the state reviews it for accuracy, and assuming they approve it, they'll provide you with a stamped filing date. And that's the date that your corporation has now been born into life. Once it's born, then simultaneously you want to make sure you draft the corporate bylaws, which are the set of rules as to how that corporation is going to conduct itself. You definitely want to obtain a federal tax ID number, also referred to an employer identification number. Simply stated, this is the social security number for that corporation. And it's the way the IRS is going to verify all of the transactions of that corporation or LLC. And it also is a way for the IRS to reference the corporation and identify you as a corporate entity. Once that's all done, you want to open up the bank account. It's really important that you set up that corporate bank account. And oftentimes when you go to set up that corporate bank account, you want to make sure you take your articles of incorporation, your EIN number, and oftentimes they may even ask you to take the corporate bylaws. And then generally speaking, once that's all done, your job is not done. You got to make sure you keep that corporation or LLC in compliance throughout the lifetime of that LLC, which is making sure you hold your first board meeting and record the meeting minutes, then ensuring that you hold annual meetings and drafting annual meeting minutes, making sure if that corporation or LLC requires business licenses or permits that you obtain those. If that corporation is planning on hiring employees, you definitely want to register for payroll tax accounts so that you can pay your employees through payroll within any of the states that that corporation is planning on conducting business. So this is a really important one, because if you're planning on hiring employees from the get-go, or if your corporation or if your client's corporation has been in existence and now they're planning on hiring employees, it's critical, imperative that you register for the payroll tax accounts, which are the SUI and the state income tax accounts. The SUI is the state unemployment insurance account, and the SIT is the state income tax account. And we, as a company, can help you with all of those tax account setups, not only at the federal level, at the state level, but also at the local county level in all 50 states. And last but not least, it's maintaining ongoing compliance for that corporation, which means, making sure you make the annual report for that corporation is timely filed. If it's in a state that you're going to need to pay franchise taxes, you pay the franchise taxes timely. And again, each state has a list of compliance formalities that you'll need to abide by, and we can provide those to you as well. Similarly, same steps as we just went through for a corporation. When you're trying to form a new LLC, new LLCs must pass through the following steps. Very similar to a corporation. Again, got to make sure that name is available as an LLC in the state you're trying to form that LLC. Make sure you know what type of an LLC you're going to be submitting as a filing to the state, whether it's member managed or manager. managed. Make sure you have that registered agent designated. Again, if you don't have one, CorpNet can provide that to you in all 50 states. Then you want to take all that information, put it in the articles of organization paperwork that you're going to submit and file to the state. Once it's filed, the state will give you a filing date. And then you want to create that operating agreement, which is basically very similar to the corporate bylaws as it relates to a corporation. The operating agreement is the set of rules that's going to tell each of the members that are part of that LLC as to how that LLC is going to be managed and operated. You want to obtain the tax ID number or the employer identification number for that LLC. You want to make sure from the get-go you're going to decide whether you're going to, elect any type of tax election for that LLC, such as if you're going to have that LLC elect to be treated as an S Corp or a C Corp, obtain the necessary business licenses and permits, register for payroll taxes, and then again, maintain ongoing compliance for that LLC throughout the lifetime of that LLC. Now, as it relates to a C Corp or an LLC, here are the steps to elect S Corporation tax status. Again, that entity, before you can make that election, has to first be incorporated as a C Corp or have filed as an LLC. A C Corporation electing S Corporation status must submit and file IRS Form 2553 signed by all of its shareholders. And again, before signing, you have to make sure all the shareholders meet the requirements of the S Corporation. An LLC electing S Corporation status must submit and file IRS Form 2553 signed by all of its members. An LLC that does not qualify for S Corporation status but still wants to have its members take a paycheck out of that LLC can elect to be taxed as a C Corporation. And for being taxed as a C Corporation as an LLC, that LLC has to submit and file IRS Form 8832 signed by all of its members. Now, let's talk about the important tax advantages and disadvantages. You're all wondering, well, Nellie, I've decided on the entity choice, but what are going to be my tax advantages and implications? Well, we've gone over this, but here's a quick review for you. Here are the C Corp tax advantages. Corporate income tax rate may be favorable for those who may not be able to qualify as an S Corp and still want to get that favorable corporate income tax rate, because a C Corp's profits get taxed at the corporate income tax rate. In some circumstances, that might work in the business owner's favor. So depending on the location and shareholders' personal tax situation, they might find that the corporate tax rate will cost them less than if they were set up, for example, as an LLC or some sort of a proprietor. Also, with a C Corp, there are possibly more tax deduction opportunities. As a C Corporation, the business may be eligible for more tax deductions than if it were an LLC partnership or sole prop. And then remember, eligible C Corporations may be taxed as an S Corp, enabling them to avoid the sting of that double tax hit. So those are the advantages. The disadvantage of a C Corporation, as we've already discussed, is that double tax hit. What are we talking about when we're referring to that double tax hit? We're talking about a C Corporation's profits being taxed when they're earned. So the C Corp is going to get taxed once at the corporate level when it's earning the profits, and then any of the profits paid as a dividend income to shareholders are taxed again on the shareholders' individual tax returns. Let's move on to the S Corporation tax advantages. Again, with S Corporations, as it relates to an LLC, the S Corporation lessens the self-employment tax burden on LLC members. What are we talking about here? We're talking about the fact that only income paid to LLC members on the payroll are subject to self-employment taxes. Profits paid as distributions are not subject to Social Security and Medicare taxes. So LLC members may find that the S corporation election lowers personal tax burden for them. When it comes to a C corporation electing S corporation, it enables C corporations to avoid that double tax hit. Again, as an S corp, a corporation's profits and losses flow through to the shareholders' personal tax returns and are taxed at the individual shareholders' individual tax rates. The corporate entity does not pay income tax anymore when that C corporation is taxed as an S corporation. Also, shareholders that are employees of the C corporation only pay self-employment tax on the wages or salary that the corporation pays them, and dividend income paid to shareholders is not subject to self-employment tax. Those monies are taxed as either ordinary income or qualified dividends. Now, here are the S Corp tax disadvantages. One, there's a limitation on potential growth. Why? Because S Corps may not have more than 100 shareholders, so growth potential may be limiting. Also, to avoid issues with the IRS, owner wages and salaries must be reasonable for type of work and industry. There's this big reasonable salary requirement when it comes to S Corps. What are we talking about here is that shareholders of a C Corp or members of an LLC, if they go on payroll, they have to pay themselves a reasonable salary. They cannot pay themselves a minimal salary and take the majority of it as a distribution, because that's going to cause a red flag with the IRS. Also, an LLC taxed as an S Corp must pay its owners fair compensation for the work they perform. Again, what we're talking about here is that both S corporations that are, shareholders of an S corporation or members of an LLC, again, are required to comply with this reasonable salary for the type of work and industry they're performing. And keep in mind, S corps are not treated equally at the state level. So these are the disadvantages. Now, let's talk about LLCs and their tax advantages. Again, LLCs are referred to as disregarded entities. So if it's a single member LLC, it's taxed by default as a sole proprietorship. If it's a multi-member LLC, by default, it's taxed as a partnership. Again, S corporation election options for qualifying LLCs. Here, LLC members may elect to have their LLC treated as an S corporation for tax purposes, and then have the ability to earn a paycheck as a member of an LLC, thereby avoiding having to pay those horrid high self-employment taxes. And the other advantage is that owners of an LLC choose how to distribute profits. What are we talking about here? We're talking about LLC members can have the option to choose how their business will divide the company's profits and losses among its owners, allowing for members to consider not only money invested, but also time and work invested when distributing profits. The big disadvantages for LLCs is, as we've been talking about, for a normal disregarded type entity type LLC where it's being taxed as a sole prop or a partnership, there's a bigger self-employment tax burden on the members. All of an LLC's business profits are subject to Social Security and Medicare taxes. This may create an unfavorable financial situation for LLC members as they have to pay self-employment taxes on their distributive share of the LLC's profits, even if they have invested it back into the business. Because why? Members of an LLC by default cannot be employees of an LLC. We are now in time for our second polling question. Back to you.
Okay, this is our second polling question. An LLC offers all of the following tax disadvantages except one. cannot have more than 100 shareholders. Members of an LLC cannot be employees. Bigger self-employment tax burden. Business profits are subject to Social Security taxes. So pick the answer that's most appropriate and submit it here. I want to just mention quickly, we have only 5 minutes left, and we need at least one more polling question in that 5 minutes because we'll have a hard stop at the top of the hour.
Yeah, let's go ahead and go to that third polling question. And I'm going to go into compliance right after this.
Okay, that sounds great. And you can kind of coach us through that question after I read it.
Yes.
So this is the third polling question. To make the switch from a C corporation to an LLC, all of the following would apply except which one? Assets of the C corporation would have to be sold, file a statutory conversion, file a statutory merger, or file Form 2553. Which one don't they have to do? Can you give us a clue?
I can give you a clue. To make the switch from a corporation to an LLC, it's going to be a filing.
Okay.
Did you want me to give you the answer, Gail?
I think that's enough of a clue, but you can go ahead and give the answer if you want.
It's basically when you're going from a corporation to an LLC, you're going to have to file a conversion.
Okay.
Yeah, so it's a statutory conversion, and it will only happen if that state allows a statutory conversion. If it does not allow it, then they would have to dissolve the initial corporation within that state and then form a new LLC.
Excellent. All right,
Okay.
we've got 4 minutes left.
Yes, and I am going to go through these very quickly. We have these slides for conversions available for you to download. I'm going to just quickly let you know that if you have an entity and you want to, if you have a legal entity and you want to switch it to a different entity, it's by way of a conversion. So if you have questions on that, again, read the slides that are available to you. And if you have more questions, you can always come to us at CorpNet. But let's move into business compliance. Business compliance is basically, any corporation or LLC has to keep that company in compliance with both internal and external compliance requirements. Compliance regulations vary from state to state. A lot of them require annual fees and filings, franchise taxes. Some may have state corporate taxes. So we have a list state by state as to what type of compliance regulations you have to abide by for each state based on your corporation or LLC. And basically the consequences of non-compliance are that if a corporation or LLC falls out of good standing or compliance, then you are risking piercing that corporate veil. The state could impose late fees and penalties. And worst case scenario, you may lose your corporate standing within the state office, and the state could dissolve your LLC or corporation. So we have internal compliance requirements that are basically the tax ID, the bank account, the bylaws and minutes, operating agreements, corporate resolutions, and then there's external compliance requirements that we've listed here for you. Both corporations and LLCs have to abide by both internal and external compliance requirements. I'm gonna have Gail basically start the polling question for number 4, but we're gonna keep moving on for timing purposes. We have a plethora of helpful resources here for you at CorpNet, ranging from business name search tools, the interactive business structure wizard tool, our CorpNet compliance portal with monitoring and proactive alerts. We also have an annual meeting minutes service if you have clients who have corporations and need annual meeting minutes drafted for this year or any other year. And of course, our blog and a plethora of business guides and checklists. Again, you can visit us at www.corpnet.com. And for those of you interested in offering our services and adding a new stream of revenue to your already list of services, We have a great partner program whereby it's created for anyone representing clients, attorneys, accountants, CPAs, enrolled agents, any of you who want to attract more clients, increase revenues, 10x your revenues. The partner program is designed for you. So you can start offering incorporation, business filings, payroll, tax registration, and corporate compliance services in any state to your clients by partnering up with CorpNet. Again, to find out more about the CorpNet Partner Program, visit us at www.corpnet.com/partners. There is no fee to sign up for this service. You can sign up. There's no annual fees, setup fees, ongoing fees. It's a pay-as-you-go service. You can refer partners to us to enhance your services and earn a commission on each sale. If you don't want that commission, you can waive it and pass it to your clients as a discount. If you don't want us to contact your clients and you want to maintain control, you can get wholesale discounted pricing, request private white label services, set your own pricing, and get a higher profit margin while you get 24/7 personalized support from us. Again, the program is designed to meet your needs, so we can do anything you want. 1-888-449-2638. Call if you want us to demo it for you, or simply log on, join. It's free, no setup fees, no ongoing fees. It has been such an absolute pleasure presenting to you today. Gail, back to you.
All right, thank you. Thank you, everyone, for attending today's webinar. As you can tell, there's a lot of information here to absorb. And don't forget to download the slides for this webinar. They're in the event resources at the bottom of your screen. So go ahead and click on the New Year, New Entity option for these slides. Also, there's a link to CorpNet's blog and other resources in those event resources section. As a reminder, you'll receive your CPE certificate later in your email today. It'll be from CPA Practice Advisor. If you have any questions about CPE, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. Also, if others are watching this event with you at the same computer and they require CPE credit, you can email me their names and email addresses. Again, that's gperry at cpapracticeadvisor.com. That we're going to put a survey on the screen really briefly after this, so I hope you'll take a moment to fill that out. Thank you again so much, Nellie, for an incredibly great presentation. If you haven't recorded it yet, it's www.corpnet.com for more information. And our audio is going to end now.